In this episode of Liquid Options, you'll learn an easy to follow directional trading system for the SPY ETF. I'll even share a downloadable spreadsheet of all the trades this system took so you can review the trade yourself on your own. No sign up necessary. Just stay tuned till the end of the video to get all the details. All that and more coming right up. All right, so thanks again for subscribing to the channel. Let's go ahead and get started. We're going to be looking at a Bollinger Band trading system for the SPY. And if you've watched some of my videos before, you may have heard me talk about the MOBO bands, which is a modified Bollinger Band, and that's what this is going to be too. But I thought I'd start with the Bollinger Band themselves, and we're going to modify the Bollinger Band ever so slightly to give us a short-term momentum trading system, and then we're going to dive into the results. And if you're a thinkorswim user, I'm going to show you kind of the easy way, but I want to start with just the Bollinger Bands in case you're not in thinkorswim. You may not have the mobile band indicator, but most platforms have the Bollinger Bands, and you're going to be able to modify them and trade this. It doesn't matter what platform. There's a couple bonuses here if you are a thinkorswim user, so make sure you stay tuned for that. So let's start with the Bollinger Band. I'm going to dive into the settings real quick, and the basic Bollinger Band setup is a look back period of 20 with a standard deviation of -2 and +2. And basically what that means is that the middle line here is the 20-day moving average, and then you have two standard deviations above and two standard deviations below. And you can see as the market starts to move, you can see we've had this pullback. This is the Chinese trade tariff tweet storm that Trump put out last weekend, which kind of took everyone off guard. But anyway, you can see as the volatility picks up, sometimes the bands expand and sometimes it contract. And this strategy we're going to cover today has nothing to do with any of that. What we're going to be doing is we're going to be going back to the Bollinger Bands, and we're going to modify them. And what we're going to do is we want a shorter look back period, and we're going to basically cut this in half. And the look back period is going to be 10, and the standard deviation is going to be 0.8. And these aren't numbers that I made up. This is an indicator that's built into thinkorswim. I think it's put out by First Wave. It's called the MOBO indicator, or momentum bands, and I'm going to modify that real quick. And what this is going to do is pretty much narrow the bands a little bit, and you'll also have a shorter look back period. So you can see that the bands are going to be a little bit more squirrely, if you will, and that's going to tell us which direction we want to trade. So that is the modified Bollinger Band. What I'm going to do now is go into thinkorswim, and I'm going to add the MOBO band, which I already have it here. It's called the FW First Wave MOBO Basic Indicator, and you can see it already is preset with those same settings, the 10, minus 0.8 and 0.8. I'm going to go ahead and put this on the chart. And the other thing I'm going to put on the chart is the MOBO band strategy. If you are a thinkorswim user and you would like to download this strategy, I'm going to put a link into the description so that you can put this into your platform and you'll be able to see the results, because it's going to calculate the trades going back a year or two. Okay, so I'm going to go ahead and put that on the chart as well, and we'll do the P&L and stuff here in a minute. So when I put the indicator on the chart, you can see that there's now a sort of green zone and a red zone, and the upper and lower bands are perfectly matched with the Bollinger Bands. We're not actually concerned with the middle line at all, but I just wanted to show you what the Bollinger Bands, how this compares to the Bollinger Bands. So if I go back in here, and the Bollinger Bands, I'm going to simply take off for now, and we're going to simply look at the MOBO band. So that's the first part. I just wanted you to see how the Bollinger Bands and the MOBO bands, they're the same thing. It's just a modified Bollinger Band. So the trading system itself is pretty simple. I'm looking at the 4-hour chart, and we're going to look at a couple time frames. I like the 4-hour chart the best. I think it actually performed better from a sense of choppiness and directions and whatnot. But the 4-hour chart, I think, is the best time frame, and we'll see why here in a minute. And the strategy is pretty simple. Let me zoom in a little bit. when you get a close, when you get a close above the upper band, the band itself, the zone in the band is going to turn green. That is a long signal. That means what this strategy is going to do is buy SPY when you close above the band. And what that's saying is that there's a momentum breakout to the upside and you want to go long. And you're going to stay in that trade. What the strategy is going to do is stay in that trade until, and you can see, well, let me zoom out a little bit. You can see here this for the past one. Here was the entry, and we stayed in the trade until the market broke below. So what this strategy is going to do is close the long trade when you close below the lower band, and then basically reverse and go short. So you can see that, we closed the trade here and then ultimately went short. We're actually still in this trade. That's why you don't see the line. The strategy is still in this trade. And even though you got back up here, you're going to take a little bit of heat. But had you closed above the band, you would simply close the trade. But in this case, the trade is still in place, so you don't see that line until it closes. So at this point, the trade is short. And that's really it. That is the entire strategy. Buy, go long when it closes above the band, and then close your trade and go short when it closes below the band, and then buy and go long when it closes above the band, and that's it. I'm looking at the 4-hour chart. So next thing we're going to do, let's go into the strategy settings, and I'm going to just put on here 100 shares. And right now we're just looking at buying the shares and selling short. You can do this with SSO, SDS. We're also going to talk a little bit about how to apply this to buying calls and puts. But let's just look at buying 100 shares, and then the floating P&L, I'm going to turn that on, and let's apply that, and we'll kind of just zoom out a little bit. And these are all the trades in the last 360 days. Now, these are trading days, not calendar days. So 360 trading days is about a year and a half, give or take. And that's as far as I can go back and think or swim right now. But you can see, from a directional standpoint, the strategy has done pretty well, given the market's been pretty crazy. And when you think about this, the when this strategy started, we were at 262, and now we're at 288. So we're basically, 200 points higher on the S&P, or 22 SPY points or so. But the strategy kind of has made a little bit of money. It allows you to play both sides. And again, I'm looking at the 4-hour chart. The other thing that worked pretty well was the hourly chart. The hourly chart made a little bit more money in the last. Remember, this is 360 days, trading days. So the hourly chart actually made more money, but you also had a lot more trades. So the commissions are going to be a little bit higher. I wanted to kind of just share with you the different strategy and time frames and how that looked. And I do think this is a better intraday strategy. When you go below an hour, this actually stops working. Let's go ahead and I'm going to right click here and show the report. And you can see all the different trades that it took. In the description of the video, I'm going to make this spreadsheet. I'm going to download this and make this available. If you want to download this, feel free to, maybe you don't have TOS and you can't get the strategy in there, but you can download this and see all the different trading times. And again, this is based on 100 shares. So that's the strategy. Now let's talk about how we can trade this with directional options. And basically, if you want to trade calls and puts in place of buying the stock or buying SPY or maybe buying SSO or whatever. And, one thing you could look at is we'll actually switch over to SSO. SSO is a 2 times ETF of SPY. And, you can see it's pretty consistent. It worked pretty well, but the price is much lower because it's 2 times. So you can make about the same money with less capital. So what we're talking about here is now, using leverage to make more money with the money that we want to allocate. So for the SPY example, what I'm going to do here, and this is, some guys are going to be pissed when I do this, but I'm going to go in the strategy settings and let's talk about the trade size here. So I put in 100 contracts, and that means 100 shares. So 100 shares of SPY. So if you think about this for a second, if you were to buy a Delta 70 option, and I think that's the best, sort of stock replacement strategy option. So again, we want to replace the stock instead of buying 100 shares or shorting 100 shares, we want to buy a delta 70 call or maybe a delta 70 put. So by putting it to 70 contracts, this is going to, closely mimic, and I know a lot of guys are going to get upset about this. This is the closest I can get, I should say, to saying, okay, if I bought a delta 70 option, one option, that would be close to buying 70 shares, because that's what delta means, right? If the stock moves a dollar, you're going to make $70. Well, if you have 100 shares and the stock moves a dollar, your delta is 100, right? You're going to make $100 if it moves $1 because you have 100 shares. So by sort of, I don't want to use the word translate or comparing, if we set this to 70 contracts or 70 shares here, this is close to what a delta 70 option would be. Obviously, as the stock moves in or out of the money, or maybe not out of the money, but it starts to move up or down, the delta changes because of the, all the Greeks and all that stuff. But this is, about as close as I can get using Thinkorswim at this point. So when I do that, you'll see the profit comes down, but this is buying one contract, close to buying one contract, one call or one put. That's about a delta 70. That is not going to be the case for delta 30. So I just think that if you're going to try to do a call or put strategy that mimics a long short strategy, I think you're better off with in the money options. And I just wanted to show you, approximately comparing a delta 70 option with buying the stock. Again, loose probability or loose correlation here. One other thing to consider is if you're not really if you don't want to buy the options and you want to short the market, you can also trade SDS. SDS is a 2 times short ETF. So one thing you could do is when the market, and I do this a little bit, like in an IRA type account. If when the market fires a short signal, instead of trying to short the market, you could simply just buy SDS, which is the inverse, right? And then when the market goes long, you can buy SSO. So that's a different way to get leverage. So I hope that made sense. In the description of the video, I'm going to put some links there if you want to try to get the strategy for toss or you want to download the trading results for the 100 shares. I'm going to put those in there as well. I'll put it over where you can download it. No sign up, no email. I don't want any of that. I'm just going to give it to you. So be sure to like the video. I love to hear your comments, and I hope you subscribe and click the little bell, and I'll see you at the next video.